I've been trading London session for the past 5 years. In today's video, I'm going to show you a complete tutorial on how I set up my trade plans just before London session so that when I go into London session, I know exactly where and what I'm looking for to execute. I'm going to go over some of my live trades that I've taken in the past couple of weeks, as well as the trade that we're currently in with my community that we took on the live stream. Before we get into the juicy stuff on the charts, I want you to make this one mindset shift that absolutely moved my trading career into a whole different realm. I want you to get out of the mindset of trying to predict price, whether that's from your key levels, your trend lines, your areas of interest, your S&D zones, your liquidity points. If you're looking to buy the prediction of price reacting off a trend line, or if you're an ICT trader looking to sell price after a buy side liquidity sweep, I want you to change that. And I want you to start reacting to price with a disciplined set of rules. What exactly does this mean? Well, when price reaches your specific area of value or your point of interest, let's for the sake of this video talk about a demand or a supply zone. Once price reaches your area of value being your supply zone, normal traders would be anticipating price to react, set their limits, or wait for their lower time frame confirmation, trying to predict price to go short and run lower. Instead of trying to predict that move, this is what I want you to do. When price reaches your area of interest, whether that be, again, your supply or demand zone, a trend line, whatever concepts that you trade, everybody has different entry criteria. Some may be an engulfing candle, some may be a change of character, some may be Wyckoff, some may be AMD. My specific confirmation is an inversion fair value gap after a liquidity sweep in a higher time frame POI. And this is exactly how I started reacting to price than trying to predict price. Once price reaches my area of interest, again, let's use the example of a supply zone. That specific supply zone needs to have a set of rules, and I will only execute if those set of rules are there. One of my rules are that specific supply zone needs to have an inducement or available liquidity to sweep into that supply zone. After price creates that sweep into the supply zone, I have a mechanical rule-based 3-minute inversion fair value gap entry model. One of two things are going to happen. If price prints your entry confirm, you execute. No hesitation, no emotions, no doubt. Price is printed exactly what you're looking for. If price does not print confirm, you don't execute. You move on to the next trade plan or you move on to the next day. And that is what I mean by simply reacting to price. If price prints what you're looking for, react to it and execute. If it doesn't, react to it and don't execute, rather than trying to predict price from a specific POI by setting limits or from a specific key level or a trend line for the sake of forcing yourself into trades to try and make a quick profit. One thing you need to understand, again, before we hop into the juicy stuff, is that trading is a marathon percentage mathematical game. This is not a monetary dollar or pips gain game. Once you start to learn to approach price in the manner of a mathematical game, in terms of risk to reward and percentages, you will become bulletproof in your trade plan and bulletproof in your mindset. To give you a fairly good example, once you truly understand the mathematics behind trading, win rate becomes completely irrelative. I know of many traders out there that have an 8 to 15% win rate, but are making between 5 and 15% a month return. And you may ask, how on earth are you making 5% a month? And this is exactly how. Let's take this basic calculation and example over here. Let's say for the past week, I've been on a terrible losing streak and I've lost 8 trades in a row. So now I'm minus 8 risk to reward on that account. If I'm risking 1% per trade, that would be minus 8% on the account. If I'm risking 0.5% on the trade, that would be minus 4% on the account. If I'm risking 0.25% per trade, that would be minus 2% on the account. Towards the end of the week, I take a beautiful 1 to 20 risk to reward trade. Regardless of the fact that I've lost 8 out of the 9 trades that I've taken, I'm still plus 12 risk to reward up for the week. So that means if I've risked 1% per trade, I would have been minus 8% before taking that initial plus 20% return, putting me up in a total profit of 12% for that week. And this is a very good example of how you can be extremely profitable even if you're taking a 10 to 15% win rate. And this method of approaching price like this will actually teach you to learn to love losing and to love your losses. -1 in trading is like one of my favorite terms. My losing trades is the pure reason that I'm a profitable trader. You cannot be a profitable trader if you're not taking losses. And this is the direction and shift that I want you to approach your trading career. With that being said, let's dive into the juicy stuff of how exactly I trade London session profitably. Coming into the session this week, I've taken a total of 3 trades, 1 loss, 1 BE, 1 is currently running as a swing trade. I'm going to take you back to the first 2 weeks in February. I didn't take a single win for 2 weeks between the 3rd of February and the 15th of February 2024. The first trade that I initially took was also in London session, and I'll break down my specific rules and my specific criteria that I take to enter a trade, all the way from the higher time frame narrative to the lower time frame, so that I have crystal clear context of exactly where I am in price, and I know exactly where the expectation of order flow needs to go. Firstly, on Monday at about 8:30, just before London session, I took a -1 looking to target the week lows. Actually just got swept out and price targeted full TP, which I'm 100% happy with. You need to be happy with this sort of thing because it's the nature of trading and it's going to happen to you. -1 coming back all the way to Wednesday, also -1 that Wednesday afternoon. My trade plan played out again, took +3 partials, came back to BE. Again, -1, -1, and then a missed entry for the first 2 weeks. So this was -1R, -1R, BE, -1, -1, and then a missed entry. So this was a total of -4 risk to reward for this week. The following week, I took again another -1, -5R for 3 weeks in Feb, but going into the afternoon session of Wednesday on the 14th, I took a full runner of 17 risk to reward. So regardless of all of the 6 losses that I took in a row in the beginning of February, that 17 risk to reward long runner that I took on the middle of February put me up overall 10 risk to reward for that month. And this is exactly how my edge in the markets work. I don't focus on win rates. I'm 100% happy with taking 10 losses in a row, but that final runner that takes me to 20R or 30R at a full runner puts me in 10 to 20R profits for the month and keeps me at a 3 to 4% payout for that month. When you're trading $1 million or $2 million accounts, 2 to 3% per month consistently is a huge return. It's safe because your risk is managed beautifully and you will never blow accounts this way. On average, I risk anywhere between 0.1 and 0.2% for a total of 1 to 3% return on that trade. So that is why I'm 100% happy taking 9 losses in a row, because that only puts me 0.9% down on the account. But that 20R runner that I run on the 10th trade puts me up 2% on the account minus the 1% loss, and I'm still overall 1% up for, let's say, that specific week, regardless of the fact that I only have a 10% win rate. So hopefully you're starting to see how I approach my trading game very mathematically and very well risk managed, which is essentially what's kept me a very profitable trader. With all of that being said, welcome to the juicy part of this video. I'm going to give you a full breakdown on exactly how I approach price every single morning, all the way from the higher time frame to identifying my internal and fractal structure on the lower time frame to formulating a full, clear picture of price, where the expectation of order flow needs to go, and how I can ride alongside that bearish or bullish order flow. This is something that you probably taught in every single mentorship. And again, it comes down to the basics. The hardest part of this is that people actually don't know how to identify this. Your order flow and structural story of price. Price's algorithm moves in the form of 3 structure types. Swing structure, which is the strongest. Internal structure, which is the second strongest. Fractal structure, which is the weakest of the 3 structure types. So therefore, I've mechanically put these 3 structure types into 3 mechanical timeframes. Starting off with the daily time frame, price will either be creating higher highs or lower lows, creating strong lows, and creating weak highs. The expectation of order flow is to always target your weak highs until a shift to the opposite direction happens. In this scenario, we would then take out a previous strong low and now create new strong highs. And the anticipation of order flow will be after every break of structure, price will incorporate some kind of pullback phase. And I will show you as we hop onto the live charts when I do a live walkthrough with you on how you can identify the start of these pullbacks and actually ride with them and take trades within them. After price has taken out those strong lows, we are now formulating strong highs. We can anticipate the due pullback phase to start, to respect these strong highs, to continue targeting those strong lows. After that new break of structure, we can anticipate a pullback phase to continue targeting those strong lows. Now, what I've seen nearly every single trader get wrong with this, structure does not look as clean as this. It does not look as smooth, and it's not as easy to spot as this mind graph example that I've got over here. Because within your swing structure, you have internal structure occurring within, with changes of characters, smaller higher highs, lower lows, higher highs, lower lows. Within the higher time frame, swing structural story. And that brings me down to my second time frame. So we start off with our daily swing. The 4-hour time frame becomes our rule-based internal structural time frame of the daily. So from the daily, I'll hop onto the 4-hour. And this smaller structure that you're seeing within the daily becomes our 4-hour time frame internal structure. So within a large daily bullish leg, we will see smaller 4-hour internal structure. And how do we identify after the previous break the starts of these pullbacks and the end of these pullbacks to continue pro trend to target our weak highs? Well, we just react to what our internal time frame is doing. Once the internal time frame prints that break of structure to the downside after the swing break of structure, this is confirmation that the pullback phase is now going to start. But remember, even on the internal time frame, after every break of structure, we can incorporate a pullback phase into SND levels or key levels or whatever strategy that you're trading to follow through price to those weak lows, and you will be able to get involved on riding these shorts. How do we identify when the pullback phase is finished and price is now ready to target our weak highs? Well, similarly, you follow through your internal structural story. As soon as price stops targeting the weak lows and creates that break of structure to the upside by taking out and breaking structure on a strong high and now creates new strong lows, this is confirmation that we are now ready to target these weak highs, allowing you to get involved in longs to target those weak highs and remain pro-trend with price. And even within our 4-hour time frame, there is smaller, tiny structure that happens on the lower time frame within. So now your charts are starting to look a little bit more messy because your structure story is not as easy and as clean to see. What I've developed in MMFunded, which stands for Mechanical Methodology Trading, is a rule-based, simpler way to identify your structural and order flow story to remain on the right side of price 100% of the time. And that leads us to our fractal structure being our M15, which is the fractal story of our daily time frame. So the 4-hour is the internal of the daily, the M15 is the fractal of the daily, which is also the internal of the 4-hour. So let's go and do a live walkthrough on price and formulate a potential trade plan for today. I'm going to give you full top-down analysis based on what I've just taught you so that hopefully you can go and practice this yourself. Just to give you a little bit of insight, I'm going to hop onto one of my favorite pairs, Euro USD, give you the breakdown on the full structural story from our swing time frame to our internal time frame, all the way down to our lower 1 minute and 3 minute time frame to execute our trades. And then we'll redo this again on a brand new, clean, fresh chart so that I can show you how to mark this up from scratch. All you're really looking for on the daily time frame is clear swing structure that's taking out weak highs and creating strong lows. So here you'll see all the way back in February 2023, we most recently had a daily break of structure to the upside with a candle body closure. Created a new strong low. How do we identify that strong low? Well, after the previous break of structure, we can anticipate that pullback phase. The lowest point after that pullback that created the next break of structure becomes our strong low. So therefore, the anticipation after this latest break of structure to the upside would be to incorporate a pullback phase. We pulled back into the discount of the swing range, mitigated an area of interest, internal shifted bullish, confirmation to target our daily weak highs. After the new daily break of structure to the upside, we now created a new strong low, lowest point after that pullback that created the next break of structure. After that daily break of structure, what can we anticipate? The start of the pullback phase. But instead of price respecting our strong lows, we then broke structure to the downside. So what does that mean? Our daily swing structure story has now shifted from bullish to bearish. So therefore, the new anticipation of price is for after this break of structure, a pullback phase, always highest probability to pull back into premium of the swing range in a bearish market. We mitigated a premium area of interest, in this case a supply zone. The internal has now shifted bearish. New internal strong highs, internal weak lows, which is our 4-hour time frame. Hence why, without even looking at the lower time frame, I already know that shorts on Euro USD is going to be higher probability. But that doesn't mean longs are invalid, and I'll explain to you in the next 5 minutes. So therefore, the eventual anticipation for price will be to continue targeting these daily weak lows. And if you want to get more context on the daily, you can even hop over onto the weekly to get that extra confluence and context on why the daily is doing what it's doing and why it perhaps shifted bearish. On our weekly time frame, we most recently had a previous break of structure, the pullback phase starts, price then continued to target those weak lows, creating a new break of structure. Highest point after that pullback becomes our new strong high. Weekly pullback phase started, new weekly weak low. We've now mitigated premium of this overall weekly swing range. So therefore, now we know why the daily went bearish, is because it's just following the rules of order flow and the expectation of where order flow needs to go to target our weekly weak lows. The daily is currently bullish, mitigates premium of the weekly swing range. We then shift bearish, which is confirmation that the internal time frame of the weekly has gone from bullish to bearish, confirmation ready to target our weak lows. So this is what I mean. When once you start to learn to react to price, then trying to predict, it puts you in a whole different realm. And that's exactly what's happening over here. We spoke about this trade plan, and I said Euro USD is going to do this in June last year when we were on live stream. Half a year later, we're now exactly at what we discussed 7-8 months ago, nearly a year ago. We said that there's going to be good probability that the daily is going to shift bearish as confirmation to continue targeting these weak lows. But keep in mind, after the daily break, we can anticipate a pullback phase. And this is the exact trade plan that we discussed in November. After that daily pullback and the internals on the 4-hour and the M15 start shifting bearish, this will be very good confirmation for a long-term swing trade to target our weekly weak lows, which is exactly the trade the community and I are currently in that we executed in yesterday morning's London session. Let's come back to our daily time frame and break down exactly what's happening inside of here on the lower time frame. So from the daily, we come over to our 4-hour time frame. After the previous daily break of structure, now from what I've just taught you, how do you identify the start of that pullback? Comment down below. Let me know what you think. Well, your internal needs to shift bullish to the opposite direction to confirm the start of that pullback. 4 hours bearish, creating strong highs taking out weak lows, new strong high. We then have that break of structure to the upside. This break to the upside confirms the 4-hour now has a new strong low. The anticipation of price will then be to respect these strong lows and create higher highs and more strong lows by taking out the weak highs. Now, regardless of the fact that this is a 4-hour strong low, after this 4-hour break of structure, we still need to keep in mind our daily structure. This still becomes a daily weak low. So we know that in the future, whether that be a couple of weeks or a couple of months, price's eventual anticipation will be to continue targeting these daily weak lows. So way back in October last year, we continued with the 4-hour pullback phase. 4-hour break, strong lows, 4-hour break, price respecting those strong lows, still targeting those weak highs, new strong lows. Now that we've mitigated premium of the daily swing range, we can start to anticipate for the 4-hour to start shifting bearish in realignment with the daily and with the weekly. Okay, so we now then shifted bearish with the candle body closure. We created new strong highs, and now we've created weak lows because inside of the 4-hour time frame, we have our M15 fractal structure. M15 took a break to the downside, strong high. Highest point after the pullback, after the previous break of structure. And you can see it clearly if I mark it out like this. After that 4-hour break of structure, what can we anticipate is the start of the pullback phase. How do we identify that? Our internal needs to shift in the opposite direction. We shifted internally bullish, confirming the start of the 4-hour pullback phase. What can we anticipate? It's good probability for price to mitigate the premium of the 4-hour swing range in a bearish market. We mitigated premium supply, the M15, then shifted bearish. Strong low took out the previous week high. We broke structure to the downside. Inside of this range, we mitigated premium. So now we know the M15 is bearish, the 4-hour is bearish, the daily is bearish. Everything is realigned to target our 4-hour swing week lows, our daily swing week lows, and even potentially our weekly swing week lows. Now, when you're going into session every morning with this clear structural story, you know exactly where you lie in price and you know exactly what you need to target, giving you such a crystal clear understanding of price and your trade plan, giving you a huge confidence boost in your trading and giving you that bulletproof mindset. So let's go into the trades that we took this week based on all of this. So coming over to our M15 fractal structure of the daily time frame, which is the internal of our 4-hour. And this is also the time frame inside of MMFunded we spend 90% of our time on. M15 continued beautifully bullish. You can see over here within the last couple of weeks, I've been riding this pullback. Even though it's swing counter trend, you can 100% valid ride these pullbacks with longs over here as well. And we eventually mitigated premium 4-hour supply. Even though the M15 was still bullish, we can now anticipate for price to shift bearish, which is exactly what we did. Previous M15 break of structure, lowest point after the pullback that took that break to the upside, price then broke structure to the downside. We continued bearish. Over here, we shifted bullish again, but in this bullish shift scenario, we understand purely because of the higher time frames being bearish, this was most likely just a liquidity sweep into a higher time frame 4-hour supply to still continue going short to target our weak lows. Similarly to what happened yesterday, we continued M15 bearish, pullback, new break, pullback. Instead of targeting those weak lows, we shifted bullish again into 4-hour premium supply, just being this as a liquidity sweep. So therefore, still good probability to target our weak lows. Okay, so now that we have our current M15 structural story mark out, we now have this as our new M15 strong high. Okay, and within the M15 structure, we have not formed a weak low yet. Within the M15, you need to follow your M15 internal, previous break, strong high that caused that break. Now remember, after the M15 break of structure, how do we identify the start of that pullback? Price needs to take out a strong high to make this a weak low. So therefore, this is not our rule-based weak low yet. So now that we have our complete structure story on Euro USD, this is exactly how my confirmation works. All I look for is when I mark out the M15 swing range. All right, you mark out your strong high to your weak low. You have premium, equilibrium, and discount. In a bearish market, selling in premium is always highest probability. Equilibrium, discount, premium of that range. Why is selling in premium pricing more probability or higher probability? Well, because heavy institutions that run millions and billions of dollars of orders through price, they want to be selling at the most expensive price possible. Heavy institutions and banks that are buying price want to buy price at the most discounted prices possible. So in a bullish market, when price is going bullish, we'll be creating new high highs, breaks of structures. Once price mitigates the discount of these swing ranges, always good probability that we can anticipate the internals to start shifting bullish to target those weak highs. This is a good area of interest where the institutions are most likely going to start buying at the cheaper prices so that we can ride price with their footprints. Vice versa for a bearish market. In a bearish market, creating strong highs and weak lows, we want to be selling price in the premium of these swing ranges because we can start to anticipate our internals to start shifting bearish in realignment with the swing, purely because this is a good area of interest where the institutions will start selling at the most expensive prices possible. We're going to start over from scratch on a fresh, clean, completely new pair that I don't trade myself. And I'm going to show you how in the next 5 minutes, I'm going to get a crystal clear understanding of where odd USD needs to go and formulate high probability trade plans based on the swing, internal, and fractal structural story of price. We call that our 3 structure types. So coming over to our daily time frame. What did I mention before? We want to look for clear highs and lows and follow through that story to get to our current story. So if we backtrack a little bit to 2022 on odd USD, previous break, pullback, new break to the downside, pullback, new weak low targeted, pullback started, new strong high, new weak low. So this is now our current daily structural range. Okay, we can go and mark this out more formally. Previous daily break of structure to the downside, current strong high. We can mark that out as our daily strong and our current daily weak low. So without even looking at the lower time frames, we know that once the internals start to realign bearish, this will be very good probability that we're going to continue short to target our daily weak lows. All right, previous daily break of structure, pullback into premium supply. Coming over to our 4-hour internal time frame, same thing repeats. We can backtrack a little bit and mark up our 4-hour structure. Previous break, strong high, weak low. Price targeted those weak lows with a candle body closure. New strong high, highest point after that pullback. Price then broke structure to the upside. Continuing bullish, price pulls back, respects the strong lows, continues to target the weak highs. New break, pullback starts. Strong lows, weak high. New break, strong lows, weak highs start after the pullback phase starts. Instead of continuing to target our weak highs, we then broke structure to the downside. New strong highs, new break, new weak lows after the pullback starts. So now we know that price is currently in the 4-hour pullback phase. The 4-hour is bearish in realignment with the daily. This will be a very good probability trade plan to start targeting our 4-hour weak lows and also our daily swing weak lows. So now that we have our 4-hour structure, we can mark that up more formally. Our most recent break of structure to the downside. All right, wicks do not count as a break of structure, as that is just a liquidity sweep. Our 4-hour strong highs, our 4-hour weak lows. We can mark out our areas of interest, our extreme 4-hour supply, our more recent 4-hour supply, or the supply at equilibrium of this range, which we've now just mitigated into premium, and we've mitigated this area of supply. Coming over to the M15 time frame. All right, we can backtrack a little bit. Previous break to the downside, strong high. Pullback, break to the downside, weak lows targeted. New strong high, break to the upside. Pullback started after the internal shifted bearish. New weak high, new strong low. So very large M15 swing range. And the reason why is because, let me just mark this out more formally so it will make more sense to you. Our current M15 strong, low, our most recent M15 break of structure to the upside, our M15 weak high. The reason why none of this becomes all of this over here, why none of this becomes swing structure, is because none of these highs or lows took out any previous swing weak high or strong low. So therefore, all of this remains as the internal structure of the M15 time frame. Okay, so we can then follow through our internal structure. Previous break, pullback, new weak lows, break to the downside. Strong highs respected, break to the downside. Price never candle-bodied close above that strong high. New strong high. After the next break, pullback, break to the downside. New break, strong high, pullback, weak lows, break to the upside. So therefore, this confirms we're now in a bit of an interim bullish run on the M15 internal time frame, catering for more of the M15 swing pullback. So this will be our internal M15 break, our most recent, and we can follow this through. Break, pullback, new break to the upside. Break, pullback, break to the upside. So this then becomes a strong low, which we then broke to the downside. New strong high, pullback, new break to the downside. Internal strong high, break, pullback, new internal break to the downside. Strong high, our weak lows haven't formed yet. We currently have this area of supply and control. So now we have our internal swing range, which is currently bearish. M15 is bullish, understanding that there is very good probability that this M15 is going to shift bearish to target our 4-hour weak lows. So therefore, I'm 100% happy following through the current internal structure. We have a valid area of supply, which has the inefficient push. It has valid inducement. It's unmitigated, and has created a break of structure. Those are the 4 criteria that makes a supply zone a high probable institutional level where there is good probability price can fulfill orders in the supply to rebalance demand that's missing, to continue price short to target our weak lows. So therefore, my entry plan or entry criteria or trade plan for odd USD going into session for today would definitely to be a sweep on this draw of liquidity. And all I would need to see on the 1-minute time frame, I'll show you my exact entry on EU in a bit. Sweep of this liquidity, mitigation into the supply, initial reaction, some kind of range, sweep of that high, and an immediate inversion gap entry. So how an inversion works is a bullish fair value gap shifted bearish. An entry would be on that candle body closure after that inversion gap fails. stop above the high to target our relative weak lows. And if you want to go for the full runner, our swing weak lows. Hey everyone, quick post-editing interruption. While I was busy editing this video on my other monitor on the right-hand side of me, I was busy watching this odd USD trade plan with the charts open, as it was a really good probability setup, and the entry criteria literally played pinpoint perfect. And this is a good example of letting your plan play out and executing based on that plan and based on the reaction of price. Simple rules, really simple, guys. If your entry criteria prints, you execute. If it doesn't, you don't execute, you move on to the next plan. So this is exactly the entry that I took on odd USD. As we just discussed in this video now, you'll see over here, we had our inducement swept into this POI, quickly coming over to the M15, this exact same POI that we talked about right now. Coming over to my 3-minute time frame, which is the time frame I use for my mechanical AMD inversion fair value gap entry. We had a draw on liquidity into this area of supply at the premium of this internal range. As we just discussed, what I always look for is the initial reaction, some kind of range, price really just bouncing back and forth inside of a range, a sweep of that range and that initial mitigation, and straight after that sweep, all I'm looking for is an inversion fair value gap. If you zoom in quite carefully over here, you will see it. You're looking for a pretty clear fair value gap in a series of 3 candles. 1, 2, 3. You'll see over here between the first and the third candle, there was a very small fair value gap that hadn't been fulfilled. And what an inversion gap essentially means is we want to see a candle body closure below that fair value gap after the sweep of the initial reaction into the higher time frame POI alongside your structure story. This was the market execution that I took on odd USD. As soon as this candle closed, stop above that high, looking to target initial partials at the M15 internal week low, and I'm also happy to try and target the overall 4-hour swing week low, all in full alignment of the higher time frame to the lower time frame. I'm glad you guys got to see an actual example play out live in today's video. But yeah, let's continue with the rest of the video. And that is exactly how you squeeze out these large 30, 40 odd trades, is by refining price all the way from the higher time frame to the lower time frame. Price is fractal in nature. What occurs on the 1-second chart, the same rules and same algorithm of order flow and money applies on the weekly. Once you understand that, you'll be able to trade any time frame. However, you can't just trade the lower time frames because it's not enough context and it's not enough clarity of where you are in price. So hopefully you're starting to get a feel of how I formulate my trade plans to form these super high risk to reward trades and how I maintain profitability in my trading system. Let me come back to EU. I'm going to show you a perfect example of an entry criteria that played out yesterday morning in London session. So I always hop onto the charts at about 7:30, hour and a half before London session opens. All right, beautifully over here below the 4-hour supply, still looking to target our 4-hour week lows and M15 week lows. We had above the supply, the Asian session high is busy resting over here. Now, one thing I will tell you is a supply or demand zone or institutional level that holds the Asian session high or low as liquidity becomes a really valuable area of interest. One of my favorite entry criteria is the Asian liquidity sweep into a higher time frame POI in alignment with the structural story. So I know if I'm looking to short price in a bearish market with a bearish structural story, I need to see Asian highs swept into a supply to look for entry to go short. And that's exactly what played out over here. We had our Asian highs swept to the upside, mitigation into the higher time frame extreme 4-hour POI, onto the 3-minute chart, which is my mechanical time frame for confirms. And all I look for after the liquidity sweep is a bullish fair value gap that fails with the candle body closure. On that candle body closure, I enter immediately. I don't wait for a pullback. I enter as is, stop above the high, targeting my M15 week lows, 4-hour week lows, determining how price reacts when we get to the daily week low. I'll be happy to target the weekly week low for a potential 122R trade. And similarly, what played out on Wednesday morning, Asian session sweep into the M15 premium supply. M15 lows are weak, so we know we want to target those lows. Over here was the entry confirm, bullish fair value gap after Asian sweep candle body closed. As soon as that closed, we enter with our limit above the high. I usually give a little bit of space just for spread or a little bit of slippage with plus minus a 35 pip stop loss, targeting those relative weak lows. This trade ran 16R. We came back to BE. Beautiful play out of virtually a replay of the exact same trade plan, Asian sweep into higher time frame POI to target our weak lows. I've now partial off at the M15 weak lows, which now has become our new break of structure, and we currently at break even on this trade. So we'll hold this through for the next couple of days, perhaps even weeks or months. And the beautiful thing is, you don't necessarily have to trade high risk to reward like this. If you want to trade a mechanical 3R, for example, something like this, simply risking 1% for a 3% return, 100% valid. That's also 100% valid, because when you're trading a fixed R method, then yes, win rate does become a little bit more relative, because you can't have a 10% win rate only trading 1 to 3 risk to reward, because you're not going to be profitable. When you're trading 1 to 3 Rs, you need to at least have a 50% win rate to be very profitable. So hopefully you guys got some really good value today in how to truly identify the expectation of order flow, remain on the right side of those institutions and banks moving the markets. There's a much more detailed video that I'm about to give you in the next minute, which is your entire roadmap. I'm going to give you your own tailor-made roadmap to get you from 0 to 500K funded in the next 12 months. I've posted this video completely for free on my YouTube channel. I will leave a link in the description to that video. Very important that you watch that. It will go very nicely hand in hand with a clear roadmap to apply what I've taught you today to go from 0 to funded in 12 months. If you guys would like to become a part of MMFunded, which is my private community where I've created over 200 funded members or funded traders in 2023 alone, one of the highest success rates in my country in terms of creating successful traders. I live stream with the guys every single morning, 9 a.m. London Open, going over full top-down analysis, forming trade plans based on what I've taught you in today's video. Now, the whole point of MMFunded is not for you to rely on my trades. When a trade plan plays out, I'll execute live on stream. But I'm there to shift you into the mindset of becoming your own independent, consistent, and profitable trader. One thing I can tell you, and I've been through hundreds of the most successful signal groups in the world, relying on other people's trades, relying on bots, relying on copy trading does not lead to success in this industry. Because the moment you miss one trade of that signal or of that copy trade, your entire data and return is going to be different to that provider, and it's not going to be the same. So for example, let's say you're following a signal provider. He posts 7 wins in a row, 7 successful live signals, and you were away that week and you missed them. And you come back. That next 8th signal that he posts that is now a loss, and you took, let's say, a 1 or 2% loss, while you're 2% down, that signal provider is 10% up. A huge difference in the gap, and that is why it can never be long-term sustainable. The only way to become profitable in this industry is to learn the skill yourself. And I've created this program and this way of trading in a rule-based, step-by-step, 100-hour course inside of MMFunded that will teach you how to mechanically, with a disciplined set of rules, to identify this every single morning, to make this a part of who you are, to make this muscle memory, to put in that consistent effort with you every single day. And that is why 95% of traders fail. It's not because trading is hard, it's because traders are not willing to put in that consistent effort every single day. And also secondly, 90% of traders don't have access to the right information because they don't know where to find it. That's all it is. It's consistent muscle memory work every single day in practicing, backtesting, simulating prop firm challenges through past market data on TradingView or on replay, documenting and journaling every single trade. It's not because trading's hard. Trading can be simple if you decide to make it simple, but if you decide to put in that consistent effort to figure out your own edge, and you will eventually get it. I will leave a link down below to MMFunded as well. Make sure to click on your tailor-made roadmap, and I'll see you over there on the inside.